Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Rima and Nigel. Guys, good morning.
Hi, good morning. Last day of Thursday, the beginning of a long weekend, and there's lots to unpack in the next 2.5 hours. In fact, today and this week, we've got the exit polls, Fed, big tech numbers, lots of domestic earnings to reckon with.
Well, that's right. Plenty of cues, and we've got a long weekend as well. So that's something to look forward to. But hopefully it's going to be a long weekend and there's no big news flow that comes in. That's the hope.
Absolutely. Even if there's news flow, you can kind of sort of say, well, we only react to it on Monday. But you may have to respond to it, not react to it. And we've done that over the last many weekends, which have been working weekends in that sense. Well, let's just take it from the top then, right? I mean, oil prices, I don't want to start with that. There's so much you can lead with, but oil, I think, at $120 up on your screen is the clear sort of, warning signal. Now, the 10-year, by the way, also moved up 6 basis points to 4.4%. This is completely, the rates market is, of course, completely priced out rate cuts. And oil prices is what is forcing that to happen. Retail gasoline prices in the US, of course, are at the highest level since the war started. I would think that, okay, let me just first tell you what caused this. Maybe it was anyway looking like a slow burn, slow boil, right? 107, 108 with the situation. It was one blockade earlier, it's 2 blockades now, and both sides are saying, well, I'm not going to let go and not do anything till you relent. So there was that Axios story 2 days back, which essentially said that Iran has sent a proposal, we'll open the strait, you guys talk about nuclear stuff, don't bring it up right now. Trump essentially said no, we won't, we'll maintain the blockade and we will do it till the nuclear issue is resolved and the nuclear program, etc. is that issue is taken care of. And I think that is being attributed as the big reason. Now, I would imagine over the next 2-3 days, because oil prices are where they are and pump prices in the US are also higher, whether it works or not is another story, but Trump most likely will try and, say stuff which causes the markets to believe or price in some optimism that he's open to the idea of, relenting maybe, I don't know what, but basically, he doesn't want energy prices to be where they are because, of course, it hurts the rest of the world, but it also hurts U.S. consumers. So expect commentary in that sense, in that direction, to try and bring prices lower. So will prices stay 120 through the next 48 hours, today, tomorrow? I'd be very surprised, but let's see. Now, the other big story is the FOMC. The rate decision itself was not a surprise at all. It left rates unchanged. But the big story, actually, there were 2 stories, 2 headlines out of the FOMC. One, of course, is the current Fed chair, Jerome Powell, is going to stay on the Fed's board after Kevin Walsh becomes chair, which is starting next meeting. And, in response to a question which he was asked, actually, the meeting focused not so much on economic forecasts, etc., but basically on the man himself. When asked whether he's doing this to because there's so much pressure on the Fed and the question of Fed independence, etc. And he said that he wants to serve as, and I quote, a check and balance on threats on Fed's independence. So it was very clear why he's sort of hanging around. And of course, we've seen a Truth Social post from President Trump and, a kind of insulting and a derogatory post from President Trump saying, well, he's hanging on because he can't find another job, etc., etc. But that's to be expected. Now, the third leg of this, of course, entire thing from overnight is mega cap tech earnings which came through. And Meta, Alphabet, Amazon, Microsoft, all have reported earnings beats. The reactions in after hours and post-market hours trading is all positive except Meta, which is down about 5 or 6%. Microsoft also actually was lower, but it's kind of sort of come back to being absolutely flat now. So that is the other one, and closely watched. We could perhaps talk about capital spending, tens of hundreds of billions of dollars, I think not tens, but hundreds of billions of dollars in terms of capital expenditure projected for 2026 and, of course, even higher for 2027. So that's the global bit, right? On balance, I'm assuming this morning the oil price thing is going to outweigh and outshine everything else because oil's at 120. Now, the exit poll, the local stuff this morning here, the exit polls were all published, of course, yesterday. And they're up on your screen. This is West Bengal, which, of course, the market is most focused on. Axis My India, which is a closely watched pollster, has not published its poll for Bengal. It's going to do it today. But the others are all essentially saying it's a prima facie. You can, you could look at this closely, but without nitpicking, they're all saying it's a close fight, but a clear advantage for the BJP, which is what, from a purely market standpoint, leave the politics aside, but purely from a market standpoint, what the market would like to hear. I think the Axis My India poll today, because it's a credible pollster, it's got things right in the past, will be closely watched when that kind of comes up as well. So in other states, BJP in Assam, a decisive lead in Kerala. There's a change of guard. Kerala typically flips between the left and the Congress. So this time, Congress-led UDF is seen projected to be ahead, coming back to power. In Tamil Nadu, most polls are showing that the DMK is likely to retain power. There, the Axis My India poll is now saying that the new entrant in that in the fray, Superstar Vijay and his party perhaps are going to be kingmakers. Perhaps turn out to be the king himself. So we'll see which way that kind of flips. But most pollsters are saying DMK is going to retain power. So Bengal still, to my mind, the most closely watched contest. And most are saying it's close with the edge for the BJP. I just timed and end with the levels. So, you've got the Nifty once again failing to cross 24,300. So you're in this range, 23,820 on the downside and about 24,300 on the upside. And if, of course, in the very near term, because we failed to cross 24,300 from a trading short-term point of view, maybe opens up downside risk, 23,820 and 23,550 are the two levels in that sense, in the very, very near term. Gift Nifty will give you a quick sense of where we are starting, and we'll pick it up from there. 140 odd points lower is the indicative open. Nigel has walked across to the wall. F&O positioning. Nigel, over to you.
Well, as you said, Prashant, on the domestic front, the exit polls are suggesting that the state elections outcome will be market-friendly. And it appears yesterday the street sniffed it a little bit, and that's why we ended with solid gains in trade. The problem is the troika. That continues to remain elevated. If you look at crude oil prices are higher, the dollar index is stronger, and the yields as well are up. That's not an ideal situation for equity markets, and Indian markets in particular. With the higher Brent crude prices, it's going to be a bit of a challenge to move up from here on with the kind of cues that we have. You want to see cooling off of the troika. Well, the Indian rupee, that's as well slipped a little bit. It's moved towards the 95 odd mark, very, very close out there. So some stability on this front is something that the bulls will really, really want. Otherwise, it's hard to imagine the markets move up when the rupee is weakening and you have the troika that's not in your favor. Thankfully, though, the flows have not got very, very excessive on the sell side from the FIs. In yesterday's trading session, the DIs and the FI number, they more or less cancelled out each other. Moving to the FIs in the F&O market, well, they lighted positions on index futures, with the short positioning, though, remaining elevated at around 87%. We made this point yesterday. On the whole, the absolute number is not as large as what we saw a month or so ago, but it's still in percentage terms, it's at around 87%. So the FIs aggressively net short. On stock futures, they added more longs than shorts, as the picture is telling you. Close to 2 long positions added for every 1 short position. Moving to the options data there was action at around the 24,300 call and around this 24,200 put as well. The premium on each of them around 150 to around 200 rupees. So you look at the technical levels, you look at the options data, and we get the Nifty levels. So there is important support at around this 23,800 mark. That coincides with the 20 DMA as well as the recent low that we saw. While resistance, that comes in at around this 24,600 odd mark. The Nifty Bank, that was showing signs that it wants to break away. It was heading to around that 200 DMA. Unfortunately, it's pulled back a little bit, and now it's rather close to around the 20 DMA. So you don't want this mark to breach on the downside. So keep an eye out on the Nifty Bank. Some kind of support at around that 55,000 odd mark will be very important to defend. Now, post the recent outperformance yesterday, there were some signs that there was some profit taking, in the broader markets, and that's why you had the number of stocks that were declining. They actually outweighed the number of stocks advancing after a while. But I think individual stocks will continue to do their thing of their own. And after the recent outperformance, individual stocks will continue to show strength. But yesterday, there was some bit of underperformance that we saw from the broader markets.
Thank you very much for that. Lots of big stories to track. So straight away, let's get to them. The first one is the Federal Reserve. Unexpected lines left the key benchmark interest rates unchanged for the third straight meeting, but they signal it could still cut rates in the coming months. So first, let's begin by listening in to the Fed Chairman, Jerome Powell, on what he had to say. He also spoke about the inflation concerns, the conflict in West Asia, and his stance on whether Federal Reserve's, on his stance on the rate trajectory from here on.
Inflation has moved up recently and is elevated relative to our 2% longer run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 3.5% over the 12 months ending in March, boosted by the significant rise in global oil prices that has resulted from the conflict in the Middle East. Excluding the volatile food and energy categories, core PCE prices rose 3.2% over the 12 months ending in March. This relatively high rate largely reflects the effects of tariffs on prices in the goods sector. Near-term measures of inflation expectations have risen this year, likely because of the substantial rise in oil prices.
Powell, of course, also commented on the legal actions that were currently being taken against him. Of course, the Department of Justice has dropped some of them. He said he'll stay on acting as a central bank governor once his term as chair ends. He says, well, the idea is not to be a shadow chair, but listen in.
My decisions on these matters will continue to be guided entirely by what I believe is in the best interest of the institution and the people we serve. After my term as chair ends on May 15, I will continue to serve as a governor for a period of time to be determined. I plan to keep a low profile as a governor. There is only ever one chair of the Federal Reserve Board. When Kevin Warsh is confirmed and sworn in, he will be that chair.
Okay, let's get in Mark Franklin, Deputy Head of Multi-Asset Solutions Asia at Manulife Investments on the show now. Frank, thank you very much for joining in. You want to first give your quick take on the Fed decision, 4 dissents this time. The last one is Powell. Warsh is likely to take over very soon, but Powell stays on as a governor.
Good morning. I think that the overall committee balance and tone was actually quite in keeping with the progression of the data and the anticipation of how the data may progress on the pricing side from what we've seen in the last few weeks. On the growth side, the US economic data has by and large come in quite healthily, with the exception of purchase volumes in the housing market. In exception to that, it's been quite strong. And at the same time as well, given what's happened with oil prices, it's prudent for a number of Fed officials to recognize that, certainly from a headline point of view, that headline inflation will be trending higher. So all in all, somewhat prudent that a more balanced tone was where it landed. And in fact, if you look at rate repricing in the market, even though yields did move high single digits, low double digits, the actual pricing of rate cuts, rate hikes was fairly modest in the scheme of things.
Yeah, got that. The large cap, mega cap actually, almost mega cap mania, if I can put it like that, right? All the numbers coming through. What did you make of it? It looked like market has stopped reacting to, or rather rewarding, all the AI capex story. But that changed sometime early April, I think about the 7th or 8th of April. Market started rewarding that once again. And, we've seen a stupendous move in not just the mega cap names, but everything down the line, AI related as well. What's your sense, Mark, looking at the numbers and how's it going to play out?
Well, one of the themes that was fairly consistent across the companies that reported so far was strong growth in capex and investment, and often directed at similar areas: AI, building out compute capacity, developing own internal AI capabilities as well. So the investment numbers and the guidance forward remained robust. And whilst that definitely weighs on balance sheet, weighs on free cash flow generation, one would have to imagine if the opposite were the case. If the company started to tone down their investment commitments and their guidance, the market would then infer from that there's a loss of confidence in the future growth potential or the return on investment of the capital expenditure that we've seen so far. So it's better that they continue apace with these intentions, because it signals to the wider market, for the time being at least, optimism on the part of management teams. However, markets won't remain patient indefinitely. They will want to see material return on that investment within the medium term in order to justify effectively the allocation of capital and free cash flow towards future growth rather than servicing the existing business drivers that shareholders are seeing at the moment.
Hi, Mark. Good to see you. What about global equity markets? The developed markets, the United States, those equity markets had a great run in 2025 and they're continuing the good form in 2026. What about a market like India? We have various headwinds now because of crude oil prices that have moved up. On the macro front, what would your approach be to global equity markets?
Well, let's look at developed markets globally for the time being. If you look at the last couple of weeks, you started to see a divergence between US equities and European equities, as an example. And that is fundamentally rational in the sense that the European economy has much greater sensitivity to the oil supply shock that we're seeing, and also less sensitivity on the upside to the AI boom and its relative beneficiaries. And so the market is starting to make dispersion choices between the winners and the areas of the global economy that may struggle somewhat in the macroeconomic environment that we're now in. With respect to emerging markets, similar drivers in the sense that you have to watch very, very carefully for net energy exporters versus net energy importers, legacy business models that may be at risk from AI and its proliferation versus those that are positively correlated to it. And the other point as well is watch currency and capital flows. We've seen a resumption of the strengthening of the US dollar, capital flight to US dollar assets, equities principally, but also the US taking up a huge amount of slack in terms of energy demand when the Middle East is dislocated at the moment. And those emerging market currencies that are most sensitive to capital flows away from their economies towards US and US related assets will also struggle. So we're also seeing dispersion within emerging markets as well, specifically the likes of Korea and Taiwan doing very well for the reasons I mentioned. Markets such as the Southeast Asian markets, to some extent India as well, lagging those leaders within the regional context.
Mark, we'll leave it there. Thank you very much for joining us. Good speaking with you. Appreciate your time here on CNBC-TV18. Let me just quickly run you through the interactions which are lined up here in the program. 8:35, we'll bring you the conversation with the management of Vedanta on the fourth quarter numbers. Numbers, of course, came out yesterday, very strong. Today, of course, is also an important day for the company, for the stock. 9 o'clock, we put the spotlight on metals and take the conversation forward with ICICI Securities' Vikash Singh. 9:20, Anish Tavakle joins us. He's, of course, now with DSP Asset Managers, a market match of the day. 9:30, we bring you a discussion centered around the exit poll results and what they're showing. Following that, the management of Waaree Energies will be speaking with us at 9:40 on the fourth quarter numbers. 9:50, we are joined by the management of Federal Bank also on the fourth quarter numbers. Towards the end of the program, Indian Bank joins us to break down their earnings. Stay tuned.
Time to slip into a short break, but we've got a lot of stock-specific action to track for you in our special Top 10 segment. For the time being, let's run you through the list. Bajaj Finance, Mphasis, Navin Fluorine, IIFL Finance, L&T, all of them will be reacting to positive news flow. On the flip side, Motilal Oswal, KFin Technologies, Waaree Energies, HEG will be reacting to negative news flow. And we'll also have a mixed reaction coming in on crude sensitives. Stay with us.
Welcome back. It's time now to talk about stocks. This is CNBC TV 18's list of top stocks for the day. The big one is Bajaj Finance. Ananya joins in with her analysis. Ananya.
Bajaj Finance delivered a good quarter in line with expectations. Now, asset quality was the key highlight here. For them, AUM grew 22% YOY, while net interest income rose around 20%. PAT grew nearly 27%. Now, margins remain stable. Return ratios were also impressive with ROA at around 4.7% and ROE at 20%. Now, asset quality was the main highlight with GNPA at around 1% and NPA at 0.4%, while PCR improved to 60%. Now, management sounded confident for FY27. They expect AUM growth of 20 to 24%, steady customer additions, credit costs to decline further, cost ratios to improve further through operating leverage, while AUA to remain in the range of 4.4 to 4.6 with ROE at 19 to 20%. Now, the most important thing management mentioned is that MSME stress is now easing. Gold loans will be the key growth driver. They also highlighted that AI transformation across underwriting, collection, servicing and sale will help improve productivity and profitability over time. So it was a good quarter for Bajaj Finance.
Thank you very much for that. Mphasis also reported numbers. Overall, a good quarter, largely in line with expectations. The company's top line went up by 2.5%. The street estimates were between 2.5%, about 2.3%, 2.4%, 2.5%. EBIT margins at 15.4%, slightly ahead for the full year. The company has grown at 6.7%. And this is less than what, say, Persistent has grown, but it is higher than what some of the other large cap IT companies. So on the whole, it's a decent quarter, largely in line with expectations. But Sonal now joins in with Navin Fluorine.
Well, very strong set of numbers coming in from Navin Fluorine. It was a top-down beat. Revenue growth of 34%. EBITDA was up 80%. Margins expanded by 900 basis points, leading to a profit growth of 124%, much higher than the poll at 156 crore rupees. All the segments did well. Specialty chemicals, where revenues were up 13%. For CDMO, the revenues were up 62%. HPP revenues were up around 21%. And on the back of these strong numbers, Jefferies has upgraded the FY27, FY28 PAT by 5 and 11%. They've increased the target price as well to 8,385 versus 7,800 earlier. Similar is the case with Nuvama. They have increased EPS estimates by 9.5% and 5% for the next two fiscal and increased the target price to 8,031 versus 7,653 earlier. So going with green for Navin Fluorine.
Okay, all right. Thanks a lot for that, Sonal. Well, let's hop across to Devyani. She's here to tell us about Motilal Oswal as well as KFin Tech. Devyani, take it away.
Well, let me start with Motilal Oswal. Now, the company has reported a net loss of 219 crores this quarter, but we need to look at the fine print to understand what has actually happened in the profit and loss this time around. Now, the real damage comes from a massive 716 crore treasury mark-to-market loss, and at the same time, they've also grossed up the revenue and profits, or rather the revenue and expenses coming in from the commodities trading segment that is actually supposed to be a part of the treasury segment itself. So, as a result of that, there's roughly a 1400 crore uptake in both the revenue as well as the expenses this time around, which has led to the collapse of the operating margins on the face of it. Strip all of that noise away and the core operational engine is actually quite steady. Revenue saw an uptake of 4% on an adjusted basis, while operating profits have grown 3% sequentially. Now, this resilience is mostly driven by the private wealth segment of the company as well as the home finance segment, which is growing rapidly. Now, there's also been a surge in the futures and options volumes as a result of the market volatility. And as a result, Motilal has actually seen a decent quarter this time around. That said, a net loss is a net loss, and as a result of that, we're expecting the stock to be in the red in trade today. Now, next up is KFin Tech. Now, it's also a weak set of numbers from the company. Revenue fell 6% to 347 crores sequentially, and their biggest segment, the domestic mutual fund segment, saw a 4% sequential dip as well. Now, the pain also deepens as a result of the issuer solutions, where the profits collapsed roughly around 63% on a quarter-on-quarter perspective. Overall, margins shrank 390 basis points, so we're also expecting KFin Tech to be in the red in trade today.
All right. Thank you very much for that. Well, Waaree Energies is the next one, and Vinny is here with details. Vinny, morning.
Hi, good morning. So in terms of Q4 FY26 numbers, a bit of a miss coming in on the operational front. Revenue, yes, in line, slightly better than what the street was expecting, but EBITDA, margins, profit of the company lower than expectations. When you look at it in terms of numbers, yes, revenue has seen a strong growth on a year-on-year basis. Sequentially, it's just seen a 12% growth. EBITDA margins have contracted year-on-year basis as well as sequentially. Profits are fine on a year-on-year basis. We're seeing a growth, but versus expectation, it's a miss. The order book of the company, that stood at around 53,000 crores versus last quarter, which was 60,000 crores, so a bit of a decline from that front as well. So all in all, numbers, nothing exciting that's come in. They are doing a lot of backward integration, so the capex story is there. They've spoken about FY27 guidance EBITDA at 7,000 to 7,700 crores for the company. This time they managed to be in the range of the guidance that they'd given, but seems like a bit of a pressure that's coming in, especially in terms of realization. So that's something that we'll have to understand from the management.
Thank you very much for that. Back to Ananya for IIFL Finance.
Now coming to IIFL Finance, they delivered a very strong Q4. AUM remains a key highlight here. Their loan AUM grew 38% YOY and 10% quarter-on-quarter. Their net interest income grew 13% YOY and 6% quarter-on-quarter. PAT jumped around 148% YOY and 24% quarter-on-quarter. Now asset quality was also impressive, with GNPA improving to 1.46%, net NPA 2.73%, and provision coverage remains strong at around 93%. Return ratios also improve, with ROA at 3% and ROE at around 18%. Now, management highlighted that the strategic reset towards the secured lending, gold loans, mortgages, co-lending and AI-led productivity is now delivering results. Gold loan remains a key growth driver for the business. Housing finance is also improving. Microfinance is now recovering cautiously, and their guidance for FY27 is 20-25% gold loan growth, 18-20% housing finance growth, and consolidated credit costs to reduce to around 1.5 to 1.7%. So overall, it was a very, very good quarter for IIFL Finance.
All right, thanks a lot for that. Well, let's focus on HEG. Well, the numbers actually were disappointing. Yes, on the top line, there was a mild growth, but on a sequential basis, there was a degrowth of close to around 8%. That's telling you there could be some impact on the shipments with regard to their exports, and they have some exposure to the Middle East. So I think that could be one of the reasons out there. But they reported an EBITDA loss of around 150 crores. But you need to keep in mind that there was an MTM loss, that's a mark-to-market loss that they normally report with regard to their investment in Graftech. And that amounted to around 194 crores. So that's why, in fact, if you adjust for that MTM loss, it's a positive number. But the margins have come down to around 7.5%. The adjusted margins is what I'm talking about, which compares with around 20%. And that's clearly very, very disappointing. Employee costs has spiked up by close to 40%. We'll require some clarity on that front. But, the street would have been hoping for a better set of numbers. We'll be joined by the management at noon today. But for the time being, going with red because the stock has run up big time. And now these numbers look fairly disappointing. So we'll start in the red is what I'm going with for HEG. But Vivek is joining us to tell us about L&T. Morning, Vivek.
Well, good morning. In line with the earlier news that the company had disclosed to the exchanges that they were looking to divest the Hyderabad Metro to the Hyderabad government itself. Now they've gone ahead and consummated that particular deal. The company has gone ahead and executed a share purchase agreement with Hyderabad Metro Rail Limited, remember, which is a government of Telangana enterprise. Now, when you're looking at this particular development, the entire shareholding in L&T Metro Rail will be done. Consideration for the divestment is at 1,461 crore rupees, which is a bit of a disappointment. L&T gets a little bit of a raw deal as far as this particular divestment is concerned. But when you're looking at this particular development, it should be seen largely positive for L&T, given the fact that the metro was running on losses. There were low ridership trends. L&T ran the metro for 8 years without any profitability seen as far as this particular segment was concerned. And this is in line with the company's efforts to go ahead and divest non-core businesses. Total debt was close to 13,500 crore for the metro, and with an interest cost of close to 1,270 crore on an annual basis. So all of this goes away, improvement as far as ROE as well as EPS, modest improvement will be seen. So going with a mild green as far as L&T is concerned.
We've heard from the management. We've spoken about this for more than a few years now, and now finally sort of, closing out. Thanks very much, Vivek, for that. Well, Manisha is here with a roundup of everything which is happening in commodities, and I guess a lot is, and oil's spiking at the margin a little bit. Actually, this morning, maybe $1 higher now over the past few hours. Manisha.
Oh, well, absolutely. If you look at the crude prices, we've hit $120 a barrel yet again. The last time it was resisting that level there But with 15% of gains in this week, we really are inching on the higher side. And this is a fresh 4-year highs that we are looking at for the WTI crude prices also. The ongoing Middle East conflict, keeping the Strait of Hormuz effectively closed, is what seems to be supporting the markets. Well, the experts have been telling us that even if the countries continue to be at war, but the Strait of Hormuz is open, then you will see the crude oil prices decline, the supplies because will increase. But that's exactly where we are looking at as a negotiation being stuck therein. The UAE also, markets did do a knee-jerk reaction to that. But then again, because of the war disruptions, UAE is unlikely to increase production in the near future. That's weighing into the prices. And the U.S. inventories have continued to decline. The U.S. exports of fuel is at a record high. So everywhere that you see a number is quite supportive. While the energy prices have been gaining, it is the metals, precious metals, all of that has seen a decline. Overall, on the chart in Asia, it actually is only crude oil prices and the crude products which are trading in the positive.
Thank you very much for that. And that is hurting. The GIFT Nifty is down, but so is Asia. So the Japanese markets, which were shut today trading with a cut of about 1%. Even the Korean markets are down about a half. Taiwan continues to, though, chug along, and the Taiwanese market is up. But there you have Hang Seng also lower by nearly 1%. So this rise in crude prices is hurting Asia. A quick recap then of the top stocks. Stocks with positive news flow are Bajaj Finance, Mphasis, Navin Fluorine, IIFL Finance, L&T. Stocks with negative news flow are Motilal Oswal Financial Services, KFin, Waaree Energies, HEG, and crude sensitives should be also on your radar. ONGC Oil India on the way up, perhaps oil marketing companies on the way down. Mixed picture if you look at it for the oil and gas space. Get into a break. On the other side, we'll get you a conversation with the management of Vedanta on their Q4 numbers.
Welcome back. Well, let's focus on Vedanta. The company reported a good set of numbers yesterday and will begin trading adjusted for their demerger from today itself. I spoke to Mr. Ajay Goel, the Chief Financial Officer at Vedanta, and began by asking him about the timelines for the listing of the demerged entities. Let's listen in to what he had to say.
So you may have seen in the last week, Vedanta board announced a demerger. In that case, the record date and the day on which demerger is effective has been set as the 1st of May. With that, we'll be filing for all the 4 new companies listing applications next week. And we hope that all the 4 companies will get listed and they will commence trading sometimes around mid to end June. So all listing and trading will be happening within the current quarter, Q1.
Got it. All right. Thanks for giving us that detail. What about aluminium prices? You know, aluminium seems to be in a bit of a bull run because even when that war broke out, you had gold correcting, but aluminium was rock solid because of capacities going out of the way. Now, aluminium prices are hovering around $3,500 per ton. What is your estimate in terms of the demand-supply scenario currently, and what is the price estimate you're working with?
You're right. If you look at overall dynamics, both demand and supply, and we do foresee that the bull run will continue. If you look at any estimation and any forward pricing curve on aluminium, it is in fact showing trends only upward. So we see at least the next 6 quarters, if not longer, the pricing will hold. In our business plan, of course, we are conservative, but at the current estimate, $3,500 per ton pricing we do see. I also like to add, given the situation in the Middle East, the pricing, currency depreciation, and also the premium over LME only has gone up. In that case, right now, the margin on aluminium is more than $2,000 per ton.
All right, that's a big one then. So Mr. Goel, let me push you a little bit on the largest part of the SOTP business, which is aluminium. Last year you did an EBITDA of roughly around 25,500 crores. Average aluminium prices was around $2,800. Cost of production as well was around $1,750 per ton. This is for the past year. Now, aluminium prices are hovering around $3,500 per ton. You're talking about volumes being closer to 1 lakh tons higher and cost of production being $50 lower. Do you expect that FY27 itself, the EBITDA number for the aluminium business could potentially be more than 30,000 crores?
Quite likely, in fact, quite likely, and that is very much possible. And Vedanta's focus has been on the volume augmentation and the cost compression. In the current environment, even the pricing, the premium over the LME, in fact, is a much higher. So 30,000 crores EBITDA FY27 is quite possible.
Do you think I'm underestimating that? What would be the upper end of that band?
That number, in fact, can be even higher than that. And if you also look at the current year, the overall aluminum EBITDA is almost 25,000 crores. So maybe 30,000 crores can be an underestimation.
Okay, got that. Sounding quite optimistic because that's from where you'll get bulk of the valuation. Let's talk about the rupee. The rupee has been depreciating. That's a tailwind for you, right? Put in a couple of numbers.
Vedanta is a net foreign currency earnings company. Our exports, in fact, are more than the imports. And yes, in that case, 1 rupee depreciation against dollars means more than 1,000 crores EBITDA profitability. So yes, over the last quarter, YOY, rupee depreciation is almost 7 to 8%. Last fiscal, 11%. So the entire environment in the Middle East, the pricing is positive. Currency depreciation is a positive, and the premium is a positive. There's a small dilution in terms of the freight cost and a few of the commodities. But overall, on the margin basis, situation is Vedanta favorable.
Got it. All right. Let's talk about the parent, Vedanta Resources. The debt has come down to around $5 billion odd. I recall a time a few years ago when it was close to $9 billion. From $5 billion, where is it headed? Give us a timeline.
We're looking at the debt of $5 billion at Vedanta Resources going down to $3 billion, less than $3 billion over the next 3 years time frame.
Okay. So now, if the Vedanta parent is in better shape, should we expect most of the cash flows that are generated used to cut down the listed entity? Bulk of the debt will be in the aluminum business. Should we expect big deleveraging at the listed level itself?
Indeed, if we want to look at the last fiscal that has gone by, and we as a group has deleveraged at about 1.6 billion. And out of 1.6 billion, almost 1.4 billion deleveraging has happened in the Indian, of course, all the 5 companies, including aluminum. One can expect same number in FY27. So both last year, in the current year, 1.5 billion deleveraging in Vedanta India. At the same time, the parent company will also keep deleveraging. Okay, so another $1.5 billion, right? Lower is what you're saying for this year as well. That's right. That's right. Got it. There's a very unfortunate event at Athena Power. What is the current status out there, with regard to that power unit? We are doing as a company whatever is possible. You're right. The whole case is quite tragic. The whole plant has been outsourced to the partners world over. Vedanta is doing what is humanly possible in terms of compensation. Right now, the investigation of the root cause is underway. It will take some time. But overall, the impact on the business is minimal. That is all I can say for now. Okay, final question then. What's the latest with regard to the JP asset? Seems to be a bit of a tussle between Vedanta as well as Adani. Give us an update. The whole matter is sub judice. I think at this stage, company, and I will not be able to offer any comment. The matter was heard last week. Let us wait for next week in terms of order, and then we'll speak. All right. That's the Vedanta management sounding extremely optimistic on the aluminum business in particular. And last year, just to give you a number, they did around 25,000 crores of EBITDA from the aluminum business. This year, they're saying 30,000 crores will be an underestimation and looks very achievable, given the kind of rise we've seen in prices, volume growth, as well as lower cost of production. We'll chat more about Vedanta in just a bit. For the time being, slip into a short break. On the other side, Deepan Mehta of Elixir Equities is waiting for some fundamental stock talk. Welcome back. Hope you're having a good morning. Well, for starters, we are, having a look at the screen. Then the GIFT Nifty is actually suggesting now a 150-point downtick. So that's going to be a bit of a challenging start. And I think we had some news on the bottom of your screen with regard to Welspun Enterprises. It appears they won a rather large order, 7,300 crores from MSIDC. I think that's one of the Maharashtra boards, Maharashtra State Infrastructure Development Corp. The stock yesterday was up close to around 4.5%, but this is a rather large size order, so we'll keep an eye out on that stock itself. That's it. Let's get in Deepan Mehta, Director at Elixir Equities. Hi, Deepan. Good morning. Good to see you win. Deepan, let's talk about Bajaj Finance. The numbers look quite good. I'm looking at a Citi note. They have upgraded the stock as well. The ROA is at around 4.5%. They're talking about good growth, 22, 24% or thereabouts.
What do you make of the numbers, and what would your outlook be on the stock?
Good morning, and thank you for having me on your show. I think Bajaj Finance is the new HDFC Bank because the consistency which they are delivering these results is quite amazing. And it trades at premium valuations, but look at the kind of de-risked business model which they have. You compare Bajaj Finance to any other NBFC and the kind of products which they have and how well spread they are, whether it's consumer finance also, or whether it is two-wheeler loans or four-wheeler loans, housing finance, all of it is pretty well diversified, and that's what gives a lot of comfort. And despite having such a well diversified product, to maintain these kind of credit costs is quite amazing. So, I mean, as a disclosure, it's part of our core holding and we remain invested. It's a fantastic compounding stock, if you ask me.
Dipan, hi. Morning. Yesterday, big moves in these QSR companies, Sapphire, Devyani International, all surging in large volumes. Is that a space that interests you? It's disappointed in the past. The consumer discretionary spending slowed down, growth rates were weak. But do you think it'll make a comeback?
Yeah, good morning, Rima. No, I don't think so. I think, on and off, they may report a good quarter. But there are a lot of structural challenges within the sector as a whole, which is why these companies are looking overseas and doing mergers also over here. I think the best way to play the food business or the restaurant business has to be through Eternal or Swiggy, I think. And those numbers were very impressive, especially Eternal numbers I thought were very good. And although I think maybe revenues may start to slow down, but I think a lot of focus will come on the profitability. And all of these QSR companies, their business model has been challenged by the growth of the food delivery businesses. Because now there's so much of choice for the consumer to order food, to even eat out, or different choices. So that's why I think that the better way to play this restaurant and business would be through companies like Eternal and Swiggy and not through the QSR players.
So buy Eternal at 254?
Only if you have a very long-term view, I think. You need to be extremely patient and look for something like 4 or 5 year type of investment horizon. But at the end of the day, I think this company will become solidly positive in terms of net profit. And even after that, 4 or 5 years from now, also it can sustain about 15-16% type of top line growth. And the focus will start coming onto margins, where operating leverage also will play a very important role.
All right. Dipan, I wanted to ask you, what about these paint companies? There was a price increase that was pushed through. In fact, a couple of them. And then you had Brent crude prices that cooled off to around $100. So people were dancing away. They were saying that now they'll get the benefit. But now you have the input costs again that are expected to rise. And then the margin accretion may not happen. Though after the recent underperformance, some of these stocks relatively are cheaper. Your view on the space?
Nigel, that is right. I think in terms of valuation, all paint companies are trading at historical low valuation multiples. But you have to account for the fact that there's increased competition within the space. And certainly there's going to be a disruption in terms of supply of material as well as the cost. And it is not that easy for a consumer business to kind of pass on the cost increases. So our view on paint remains neutral to negative.
Got that. Motilal Oswal Financial, IIFL Finance all came out with their numbers. KFin Tech also. Do you have any thoughts here?
I thought that Motilal Oswal and IIFL Finance came with a great set of numbers. Both stocks are extremely attractively valued. Motilal Oswal is a great play on the wealth management business, although, we look at it as a more of a broking company, but large part of the revenues, almost 60% is annuity type business, and it trades cheaper than, say, Anand Rathi Wealth Management, or for that matter, any of the asset management companies like HDFC or ICICI, or even some of the new generation brokers like Grow. So from that point of view, very positive on Motilal Oswal. See, the numbers get somewhat confused because of the kind of investment which they have made in the portfolio. So mark to market optically causes the numbers to do not look as attractive, but the underlying business momentum is very strong. So positive there as well. IIFL, I think, among the cheapest of the NBFCs, given its, considering its size. And I think they've developed the gold financing business really well. A large part of their portfolio now is completely, hedged in terms of secured, so that gives a comfort. I certainly feel that this is one company where the P's can get re-rated at around 11, 12 times. I think it is very attractively valued.
Yeah, and the management guidance was also pretty strong. 20 to 25% gold loan growth, 18 to 20% housing finance with consolidated credit costs in a range of 1.5 to 1.7%. Dipan, stay on. We'll come back to you. For now, let's go across to Hormuz to find out what the momentum stocks were yesterday, the big movers with large delivery volumes.
Morning, Rima. And of course, the big mover yesterday was Bandhan Bank, and was the top performers in the broader markets yesterday. A very, very strong reaction to its results. At one point, the stock was even up 14% and eventually closed with gains of 11. It's the biggest single-day gain, and the volumes that the stock has seen since October of 2024. Even on the FNO side of things, the 200 call option for the May series, the premiums there were up over 160% in yesterday's trading session. Close to 13 crore shares were traded yesterday on Bandhan Bank. The 20-day average is less than a crore or just about that, and 18% of those shares were marked for delivery, so close to 2.5 crore shares marked for delivery for Bandhan Bank yesterday. The 20-day average is close to 40 lakh shares. It was the fifth most traded stock on the Nifty 500 in yesterday's trading session, hitting a 52-week high, and it's up almost 40% now for the month of April itself, and this is turning out to be the best month that the stock has had since June of 2020. Now, Garden Reach Shipbuilders was another earnings reaction. The stock ended 6% higher. At one point was up double digits as well, so closed almost 8% off the highs of the day, but gained in far the last 7 sessions. Wednesday's volumes were the highest in nearly a year for the stock. Close to 2 crore shares traded. The 20-day average is 25 lakh shares, so 8x its 20-day average. 12% of that marked for delivery, 20 lakh shares marked for delivery, 4x its 20-day average, and it was the most traded stock, incidentally, on the Nifty 500 in yesterday's trading session, surpassing the turnover made by Reliance Industries as well in the trade. The turnover yesterday close to 5,500 crore, which is 60% of its free float market cap. And lastly, Himadri Specialty Chemicals. The stock has been on a bit of a tear ever since it reported its results. 7th straight day of gains yesterday. It's up 23% now in the last 7 sessions. Volumes above 1 crore shares in 3 out of the last 7, and yesterday there were 1 crore shares traded, 20-day average of 85 lakh shares, and the delivery volumes too were double compared to their 20-day average. The stock, similar to Bandhan Bank, hit a 52-week high in yesterday's trading session and is up 36% for the month of April.
All right, interesting list as always. Thanks very much for that, Hormuz. We'll take a quick commercial break here. We'll be joined by Vikash Singh of ICICI Securities, and the conversation around Vedanta, the sum of the parts, the individual businesses and how you should look at them. We'll get Vikash in just a bit. Mitesh and Sudarshan also with us on the other side for some technical trading ideas.
Welcome back. This is Open Exchange, and we are coming to you live from the CNBC-TV18 Motilal Oswal studio. Well, let's continue our chat with Dipan Mehta, Director at Lexar Equities. Dipan, I wanted to ask you about ONGC as well as Coal India. Now, both these two are doing well because ONGC is a direct beneficiary of the higher crude oil prices. And Coal India, there is hope that finally volumes will pick up, and finally there'll be some pricing action as well. Your view on both these two names? They're cheap. They've always been cheap. Are there enough triggers to get you excited?
I think the trigger has to come from the government. And I think that this war has at least created urgency for energy security. And the two major vehicles for energy security have to be ONGC and Coal India. So I think that if the government takes the reins in their hand and does something like what they did in defense, what happened in defense was that suddenly the focus came on the shipbuilders, it came on the PSU engineering, electronic defense companies, and we saw them become multi-baggers. Something similar if it's happening in ONGC and Coal India, then you could see exceptionally good returns from these companies. But nonetheless, I think in markets like these, I think these companies are good, safe bets, very decent dividend yield, very high level of comfort when it comes to the valuation. Only disappointment, of course, is the volumes. And once there is some clarity over there, that could become a trigger for these stocks to do really well. So I would say positive on both ONGC and Coal India, but for the moment disappointed with the kind of volume growth we have seen. Largely it's because of maybe efficiencies or high realizations why we are seeing these numbers. But once we have some sort of an inkling of how the volumes will play out, I think these companies can do pretty well and provide a multi-year outperformance.
All right. Thank you, Dipan, for joining in. Let's get in some technical trading ideas. Yesterday, markets came off sharply from the day's high. The high on the Nifty was 24,334, but we ended at 24,177. And this morning, we need to prepare for a gap down opening as crude prices have now crossed $122 per barrel. So even in the morning, crude prices continue to rise. We have with us our technical experts joining in. Mitesh is here with us and Sudarshan, as always. Gentlemen, good morning. Mitesh, you go first. If there is a gap down opening, 150 points lower, what is the advice?
Good morning. So, I've been maintaining that we'll do a range of about 24,354 on the upside and 23,800, 850 on the downside. So I think we kind of tested the upper end of the range yesterday. We might just retreat back, see if this level of 23,850 holds. Then I think it should be all good and we'll still be in that consolidation. In case we break below that, then I think we'll look for lower levels. But for the time being, the idea is that we remain in a trading range.
Okay, got that. Let's get in Sudarshan as well. Sudarshan, is it the time to be brave or not yet? With Brent crude prices at $122 per barrel, you'll have to be very brave, actually. What's the view?
Yeah. Good morning. We are not that brave. This is not a good time to buy. For the last 2 days, I have said stay away. I'm sorry, but the same advice applies, and I'll quickly explain why. We made a low at 22,200 approximately. So that gives us a message that this market, whenever it is ready, will go up higher. We have a floor. But buying opportunities come when the market is in a panic. 600-700 point declines. This is still not a panic. It will be, and then we will consider buying. But at this point of time, stay away from the Nifty completely.
Yeah. Sudarshan, in terms of specific trades, what's on the radar?
Well, L&T is a buy with a stop under 4,000. Reliance is a buying opportunity with a stop at 1,400. Ambuja is a sell with a Ambuja Cement. Ambuja is a sell with a stop at 465 above. The stop is above your entry price. And REC Limited is a sell with a stop above 370. Essentially, it's a troublesome market.
Right. And Mitesh, what about you? What are your trades?
A mix of buys and sells. On the buying side is ONGC, which has been a buy earlier as well. Keep a stop at 296, look for targets of 312. That's purely crude-related trade. A buy on Bharti Airtel with a stop at 1869. Look for targets of 1930. And on the selling side, a couple of banks, banking names. I have a sell on Axis Bank. I think that's one stock which is broken down a bit. So Axis is a sell with a stop just about 1311 for targets of 1260. And Federal Bank is the other name. Federal Bank can be sold with a stop at about 288.5, 289 for targets of 275.
Just a few names, Mitesh, if we can talk about Cohans, right? Same time last week, stock was 350. It's at 470. It's the best performing stock in the NSE 500 this week. More to go here?
Well, I would believe so. I think, what can possibly stop or make the stock price give some kind of a pullback is the Nifty action. Of course, the broader market being under pressure means that the stock price could retreat a bit, especially after more than 30% rise in the last 1 week. But broadly, I think the stock is showing potential to head towards levels of 600. Now, the way to play this will be to accumulate it slowly on the declines when it gets closer to its 10-20-day averages, which are still lower. So the first port of buying for me over here would be around levels of 430. And then I would suggest additions close to about levels of 400 and keep a stop at 385.
Okay. And Bandhan is the other one, right? From 175 to 200 this week. Again, a beaten down kind of name here, in that sense. Any thoughts?
See, Bandhan, one, I had some trading position which we did book out, but Bandhan, I think there's something big happening if you look at the monthly and the quarterly charts. I think the stock eventually is heading towards levels of 240 plus. And now if you get it on a pullback, anything close to about 195, 192 would be my buying zone, and keep a stop below 180. I think very, very strong long-term charts shaping up over here. So something definitely is changing fundamentally.
You know, the other thing is Sapphire and Devyani. Sapphire is up 25% and Devyani is up 20%. I mean, there was that ratio which was announced, right, with regards to the merger when I think that came through and it kind of, one is tied at the hip to the other. But both are up significantly. Sapphire has gone from 170 to 210. Devyani has gone from 105 to 130 this week. Anything here, Mitesh?
I've not been tracking Sapphire, but Devyani Foods, yes, I think, came on a dial. I think the stock has rallied from levels of sub 100. I think the low was around 1991 to about levels of 130. So 130, 135 is a historical pivot, so there will be some supply over here. But I think eventually the price does have the potential to head towards 150. So quite positive over here. Again, this will be a stock which I would want to buy in case we get some retracement and downsides.
Got that. There's Rupee, which is starting up as well. Rupee's crossed 95 for the first time since March 30th, 2026. So, I think March 30th, let me just look at the date. I think it was around the time when you had all those circulars, etc., which came through, because in that single day, it was that 30th was a Monday. The first circular came out from the Reserve Bank of India to curb excessive, offshore positioning on the currency. On the 27th, it was the Friday after market hours. And then on the 30th of March, the rupee responded very well, and then it made a new all-time low. And then Monday, that evening, there was another set of regulation which came through. And then it decisively moved the next day, Tuesday morning, it decisively moved the rupee back above the 94. I mean, moved it into the 93 handle. We are past 95 once again, exactly 1 month later. So that's the story with regards to the dollar rupee. Of course, it's a direct consequence of the big move in oil. I mean, I think we have to also keep in mind that it is the end of the month, so there is demand. There is dollar demand from oil importers, oil companies, etc. So that perhaps also playing through, feeding through in that sense. Mitesh, do you track forex, etc., dollar rupee on the charts?
Not really.
Okay, got it. Thanks very much. And we'll speak later. Mitesh and Sudarshan, appreciate your time here. But I think we have metals in focus, Nigel, Vedanta, but others as well.
Well, that's right. Today is the ex-date for Vedanta, so that stock will continue to remain in focus. Remember, you'll have price discovery between 9:15 a.m. to around 9:45 a.m. And then you'll have normal, trading that will start from around 10 a.m. odd. That will be the listed entity, that will be there. Remember, the demerged entities, they'll get listed in between 4 to around 8 weeks. That's what the street estimates. As we just spoke to the management, they suggested between 6 to around 8 weeks. So within 8 weeks, you'll have 5 listed companies of Vedanta. For today, you just have 1. Just keep in mind, if you buy the stock today, then you will not be eligible for the other demerged entities. So keep that in mind, because today is the ex-date, yesterday was the come date. What will today's entity have? Well, it will have the 60.7% stake in Hindustan Zinc, so it will be a holding company out there. The zinc international business as well will be housed under this, and the copper business that is currently shut, and besides that, smaller businesses like the Facor business as well. So bulk of the SOTP for the entity that's going to list today is going to come in from Hindustan Zinc, and that breakup as well should come up for you on the screen. Nuvama, they have a target price for the stock itself at around 936 rupees per share. The entity that's going to list today, they have a target price of around 336 rupees, and out of which Hindustan Zinc stake accounts for bulk of that. That is 317 rupees. Let's welcome Vikas from ICICI Securities, who joins in. Vikas Singh. Hi, Vikas. Good morning. Before we get to the conversation, I want to congratulate you. September 2023, I recall you joined us, or October 2023, because it was announced on September 29. And you said that, against all odds, you believe that this is a good buying opportunity. The stock was 220, 230 rupees at that point of time. And it's done very well. So good call on that. But today, let's analyze the business that's going to be listed. That is Vedanta Limited. What are your expectations? We'll have that price discovery between 9:15 to 9:45. What do you expect it to list at?
Thank you, Nigel. So we are assigning a target price of roughly about 360, around 360 on the Vedanta Limited. So somewhere around that, including the zinc in their stake.
All right. And out of that 360 that you're talking about, Hindustan Zinc stake will be what, 330, 340?
Roughly about that, taking a whole core discount of 25%.
Okay, all right. So you're expecting it to list at more than $350. Got that. You know, I just had the management on the show. We played those bites. I spoke to the management overnight. Now, they were talking about the aluminium business, which is bulk of everyone's SOTP, to do an EBITDA number of 30,000 crores in this year itself. Last year, it was around 25,000 crores. And they said it's easily achievable. You know, the factors at play is they'll sell a little bit more, the cost of production will go down, and they'll get the benefit of higher LME prices. What are you at in terms of aluminium EBITDA for this year and the next? That's 27, 28.
So we are somewhere around 35,000 crore consolidated aluminium, including Balco, in the FY27. That is at $3,100 LME aluminium.
Okay. So if in case, you know, you'll have LME prices that remain elevated at around $3,400, $3,500 per ton, then the 35,000 crores of estimate will have to get revised upwards. Is that correct?
Yeah, that is a possibility.
All right. And the companies also mentioned, we asked the management, they said that every rupee depreciation is actually positive for them on the EBITDA fund by close to around 1,000 crores. So actually the weakness in the rupee will be good for them. What about deleveraging? You know, we have heard this enough from the management that Vedanta Limited, the listed entity, kept paying dividends out, very, very hefty ones. And shareholders were happy. But now it's come to a point where Vedanta Resources is in better shape. So why don't we see some big deleveraging on the listed companies? What are you working with? The management told us $1.5 billion is possible at a consolidated level. Your take?
We are taking a slightly lower deleveraging, somewhere around 11,000-12,000 crore, slightly lower, 1.3 you can assign. This is assuming that the Vedanta aluminium cash flow now will uprooted to the Vedanta Resources, and the Zinc India cash flow would get uprooted to the Vedanta Limited to meet the Zinc International as well as copper capex as well. And their gross debt is also on a slightly higher side, so the debt obligation has to be met there. So we are more offer that approach at this point of time.
Okay, all right. Final question then with regard to Vedanta. How big an overhang is this JP asset? There's a bit of a tussle that's going on. The Adani Group seems to have got it, but Vedanta is not letting go. What if they get this asset ultimately? How big a negative would it be?
So the matter is sub judice, so we would not comment on that. However, we are not building in any of the JP associates in our estimate as of yet.
Got it. Okay. All right. And quick call on the metals pack before we let you go. What's the top pick? Ferrous, non-ferrous names. We have some stocks like MOIL that have come out with a set of numbers which look a little bit disappointing. The stock, though, has run up 20% in the last 1 month. HEG as well. Numbers look quite disappointing. So quick comment on these names and your top pick.
So these are not under coverage. So unfortunately, I won't be able to comment. In overall metal space, we are more positive on ferrous versus non-ferrous. Non-ferrous, we have turned a little bit cautious at this point of time.
Okay. All right, Vikas, have a good day ahead. Thanks a lot for joining in and giving us that view. And good call on Vedanta when this demerger was initially announced. So we'll have to keep an eye out on Vedanta Limited. That will get listed. Vikas is expecting a listing number of around 350 rupees per share. So actually we should do away with that share price because that is the consolidated entity. You'll have 5 listed entities in the next 4 to around 8 weeks. So not fair to say that it's going to be down. It's going X.
10 o'clock is when we'll get the actual rate, right?
Yes.
9:15 to 9:45 should be the price discovery.
Yes.
And 10 o'clock.
Around 500.
No. 450 to 500 will be the aluminium business.
The aluminium business, yeah.
So this will be the 350.
360 handle.
I mean, 300 to 350. Vikas is at 350.
Yeah. Okay, got it. So that is the Vedanta story as it plays out. Many businesses separately listed instead of one. And of course, yesterday was the last day to buy it, especially, you could only do it with cash, not in futures, etc. Well, Sudarshan is with us with what she'd want you to do with regards to trade. Sudarshan, what do you have?
It's REC, sell REC with a stop of 370.
Okay, sell REC is Sudarshan's call. Mitesh, what about you?
I'll go with the long on Bharti.
Okay, long Bharti Airtel is the call.
You know, there's one more stock linked to Bharti Airtel, that's Indus Towers. Reports numbers today, and along with that, they're going to be considering a dividend. And this will be the first time the company is considering a dividend since May of 2022. And after that, they did one buyback in August of 2024. Since then, because of the issues surrounding Vodafone Idea, they've been conserving the cash. But so after 4 years, this board meeting, the company will consider a dividend. So we'll watch out for that.
I remember that 20-25 rupee number in terms of what they could pay out. Any expectations per se or no?
Around that time. Let's see what comes out this time. But it's just, hopefully it's the start of the resumption of dividends by Indus Towers.
Indus, yeah, absolutely. Well, it's on the agenda, so we'll get something. We'll see the amount. IIFL Finance is the other one we want to just sort of go back to. Ananya is here with details. Ananya, take it away.
Now coming to IIFL Finance, they delivered a very strong Q4. AUM remains a key highlight here. Their loan AUM grew 38% YOY and 10% quarter-on-quarter. Their net interest income grew 13% YOY and 6% quarter-on-quarter. PAT jumped around 148% YOY and 24% quarter-on-quarter. Now asset quality was also impressive, with GNPA improving to 1.46%, net NPA 2.73%, and provision coverage remains strong at around 93%. Return ratios also improved, with ROA at 3% and ROE at around 18%. Now, management highlighted that the strategic reset towards the secured lending, gold loans, mortgages, co-lending, and AI-led productivity is now delivering results. Gold loan remains a key growth driver for the business. Housing finance is also improving. Microfinance is now recovering cautiously, and their guidance for FY27 is 20-25% gold loan growth, 18-20% housing finance growth, and consolidated credit costs reduced to around 1.5 to 1.7%. So overall, it was a very, very good quarter for IIFL Finance.
Thank you very much, Ananya, for that. Well, here's a quick recap of things, right? In terms of stocks that we've covered from 8 o'clock this morning. Bajaj Finance is up 1.6. Mphasis is up 2.8. There is Navin Fluorine. There's an upgrade, I think, as well, 4.3 higher. IIFL Finance, Aranya just put that out, 3%, 460. L&T, nothing, I mean, slightly sideways, right? Motilal is down about 2%. KFin Technologies is the other one. Waaree Energies will come up on your screen, is down about 6%. HEG is down 7.5% or so. With oil above 120, and, the two names, right? And we started at least asking whether you should be paying attention to ONGC about 10 days back. Completely ignored name, but there is fund interest, and slowly but steadily that it's showing up in the price over the last 1 week, especially. 304 on ONGC. Oil India is up about 2% or so, but it's very dependent on what happens to the price of oil and how long it stays here, or actually stays higher. HP, BP, IOC naturally are down. Those are the companies which, at least for now, are losing a fair bit of money on petrol and diesel sales and other product sales as well. So first rates coming up. The Nifty is down 0.75% in the pre-open, and we'll have the first ones, right? 23,950 on the index. That's about a 1% cut. The Nifty Bank at about 54,700, 54,670. So one down on the Nifty and about 1.25% down on the Nifty Bank. And the mid-cap index is down about 1.25%. The small-cap index is coming up with about a 0.45% cut as well. So 23,960 on the index at this stage. Market breadth is pretty evenly spread. 700 up and about 850 down, but this is just straight out of the gates for now. It'll change. Bajaj Finance, ONGC, and Coal India are the top gainers. On the other side, you've got Shriram Finance, Eternal, Adani Ports, Axis Bank, which are coming up with stuff which is down and seeing some profit booking. Rima.
Well, it's a weak start. The Nifty is open below 24,000, hurting by the rise in crude prices and the fact that the rupee has now once again crossed that 95 mark against the dollar. It's down 0.8% on the Nifty and the sensex. Mid-caps under pressure. Mid-cap index down 1. The advanced decline ratio stands at 2:3. We've got actually less than 10 Nifty stocks in the green right now. Very few. I can count only 5. Bajaj Finance is right on top, reacting to numbers. There's a City upgrade. The management is talking about a 22 to 24% AUM growth guidance for next year. The street likes it. There's a thumbs up. Coal India has opened up in the green. ONGC is also higher. Along with that, you've got Oil India, Bajaj Finserv in the green ahead of numbers later today. And some defensive buying visible in IT names. Wipro, Mphasis, Tech Mahindra. are managing to hold on to the green line, but there are no gains there. But on the way down, it's a long list today. Right at the bottom is Shriram Finance, 2.5% gone for the day. This week, it's lower by nearly 8%. In fact, many of the private sector banks have been weak. Have been selling off this week. Take a look at Axis Bank, 6.5% down for this week. ICICI Bank, 4.5% lower, and this morning too. Large private sector banks are down 1.5% to 2%. Eternal is under pressure, that's down nearly 2%. Oil marketing companies not a part of the Nifty, but BPCL, HPCL weak, 2.5%. Auto names are again hurting. There is that sentiment impact that you can see for all the stocks which get impacted with the rise in crude prices. So you've got an Interglobe Aviation, Asian Paints, auto companies. So across the board, the sell-off is deep and it's getting deeper now. 200 points gone on the Nifty right now.
Well, that's right, Rima. Let's run you through a few companies. Then a couple of stocks are cooling off after yesterday's big move. That's Devyani and Sapphire. Both of them are down in trade. HEG, the stock is down. It's seen a big rally of late. But these numbers are very disappointing. We'll be looking forward to having a chat with the management at midday today and find out what went on. Was there a spike in raw material cost? And the follow-through in terms of realization spike didn't come about. 6% getting shaved off that one. Waaree, it appears the street doesn't like the guidance that they're given. They were anticipating, bigger guidance, and also margins have come under pressure with realizations down sequentially. So that explains why the stock is down. But keep in mind, it's run very hard from around 2,500 to around 3,500. Similar is the case with Force Motors. There was margin expansion, but just take a look at the stock's move. In the last 1 year, the stock is up almost 3 times. So that as well has come in for some profit taking. Force Motors is now down closer around 3.5%. Good top line growth, some margin expansion as well. How much is in the price? Other stocks that are moving well. SEM India Projects, Vivek had sent a review out then. He said that those numbers look quite good. The stock is open up with a gain of closer around 4%. It's a good move out there. RPG Life, we'll chat with the management the next 75 minutes or so. So that stock, in fact, is up and about in today's trading session. Let's pull both those two up. You have IIFL Finance. The numbers look quite good. The street likes it. And Spark, I'm not sure what's going on there, but the volumes are very large on Spark. And it's lighting up the fire right now. Stock up closer around 8% as we speak. All in all, crude prices spiking up. Not great news for the headline index. The Nifty is at the low point of the day. You'll have to see some cooling off in crude oil prices, and hopefully the rupee as well shows some signs of stability. Otherwise, hard to move up in this sort of an environment.
MTAR Tech is also up 5.5%. Bloom Energy, which is one of their top clients, surged 27% in the US markets yesterday on the back of numbers, and MTAR Tech gets a significant portion of its revenues from Bloom Energy, and that's holding the stock.
Just to clarify, these numbers actually came out yesterday. So in market hours itself, at around 10 a.m., we already had those notes that had come out.
But yesterday, Bloom rallied about 27%.
And,
so that rub off
yesterday, MTAR was up close to 6% in trading hours, and today it's following on with another 4% gain. So clearly, the street believes there is more in store after the positive numbers that came in from Bloom.
Okay, well, it is lots of single stock action here and there. But at a headline level, there is some pressure. Well, let's bring in Anish Tavakle, who's with us. He's Chief Investment Officer at DSP Asset Managers. Anish, I should say congratulations first on the new role. I think we're speaking with you on the air for the first time after you've taken over. So thank you very much. Congratulations.
Thanks, Prashant.
We are speaking at a time with oil at 120, one of those, I should say, dare say, unusual times and short-lived as well, hopefully. But it does change the macro context in that sense, right? I mean, it's not about 123 or 115 or 100. I mean, all those prices are too high for a big importer like us. You are someone who looks at you think through some of the sort of macro stuff top-down before going bottom-up. So how does it change things, Anish, from an investment, from a point of view of taking investment decisions?
Yeah, so look, Prashant, the thing to focus on is, do we think this is a temporary move or is it a structural change in the oil dynamics? My view is it's temporary. And if it is temporary, then I would be happy to see the move being dealt from a macroeconomic perspective by drawing down reserves, right? There is no need to transmit this shock to the domestic economy. We have a large reserve base, and the reserves should be used to drawn down to deal with this shock. See, the way I see it is this, right? Oil prices actually reflect the supply-demand dynamics. Now, oil production will, or at least oil availability will come down. Say if it comes down from 100 million barrels a day to 95 million barrels a day. And when oil availability comes down, then obviously there will be a reduction in global output, right? Because oil is a critical input. But that output will not be equally distributed. The output cut will not be equally distributed. Those people who can lay their hands on the oil that is available will see less cuts, and those people who can't lay their hands on the oil that's available will see greater cuts. Now, what's the point of having reserves if we don't use them to lay our hands on all the oil that we need? So I'm hoping that we don't transmit this shock too much to the domestic economy, and we use our reserves to handle this shock. And then if you look at it on a 1-year basis, 1 year out, if this is behind us, other factors in the economy are in good shape. I mean, we are seeing healthy fundamentals, good demand, supply capacity is well positioned. So I'm not too worried about it as long as it's a short-term shock.
Anish, what if we do a combination of the two? We do use our strategic reserves, but we also choose to pass on the burden. Because passing on the entire burden perhaps is not feasible. We will need a price hike of 20, 25 rupees. But maybe we hike it by 5 rupees, go up to 110 rupees on petrol, for instance. Then what is going to be the impact? Is it going to be large? Yeah.
So, Rima, the point I was making was not to draw down the strategic reserves of oil, but to use the forex reserves to pay for the oil, right? But look, I guess what I'm trying to say is we should transmit only as much as can be absorbed without hurting economic output. So, if we think like 5 rupees or 7 rupees will not have too much impact on the economic activity, then it's okay to pass on. But we should not pass on such a large shock that it actually impacts economic activity.
And do you think a 5-7 rupee
That's
price
the judgment
hike
call
if it
that
comes
needs to be
through?
taken.
If a 5-7 rupee price hike comes through post-election, is that palatable?
I mean, I would think so. I don't think we'll see a huge collapse in economic activity if a 5-7 rupee price hike comes through.
Hi, Anish. Good morning. Good to see you in, and congratulations on the new role, Anish. Anish, it's a bit of a gloomy morning.
Thanks.
But if you look at some positives in the next few days, one of them could be the markets waiting by for a positive outcome with regard to the state elections. They always like the ruling government at the center, to get a better hold of various states. How big a positive it is according to you? Or do you think, post the recent resilience, most of it is already in the price?
See, there's no point taking a view on like every short-term news item. I think the broad macroeconomic fundamentals are fine, right? So if you take a 1-year view, out view, right, you'll take the view that look, if this shock is temporary and the other domestic factors are in good shape, then the election outcome doesn't really change all that much. I mean, there will be volatility. Some day you'll have a positive day or a down day. But it doesn't really change that much from the point of view of the economic fundamentals.
Okay, got it. Anish, so how are you? What's the thought process you're bringing on at DSP in terms of sort of managing this environment? Just run us through the investment process with regards to staying invested, picking ideas, getting rid of stuff, the whole lot.
Yeah, so look, our view at the moment is that given that the economy is fine, and as far as dealing with this short-term issues are concerned, you should be in companies that have strong balance sheets to withstand the short-term volatility, right? You should not be in stocks where a bad quarter or two puts the balance sheet under stress. So one is be in healthy balance sheets. Secondly, our view has been that small and mid caps were in a bit of a bubble, and that does not change, right? So the better place to invest is still large caps. Irrespective of what happens to the global situation, there are pockets of overvaluation in the small and mid caps that anyway had to correct. That is not going to be different just because that doesn't change, right? Because the stocks where promoters have sold a lot, the private equity have sold a lot at very high valuations, those will correct. So actually it then becomes a bottom-up approach of looking through where are the pockets of excess and avoiding those. Otherwise, it's a reasonably steady environment to invest in, frankly.
So what I'm hearing...
From a sector perspective, what I would say is, Prashant, I wanted to complete on the sector perspective. What I think is, the valuations in large banks, in some of the insurance companies have corrected a lot, and those are places to look at. Even if we get a good cyclical, recovery after this volatility is over, other cyclical sectors like cement, auto also look pretty good, actually.
Yeah. But what I'm hearing broadly is this: stay close to the index in that sense. That's what you're. I'm paraphrasing, but is that correct?
No. I would say, look, I would say there's a reason, there's enough justification for taking a strong, view on domestic cyclicals. So banks, autos, cement are places to be. What I would avoid are, personal lending space is one that I think is quite vulnerable. I do think that FMCG still will see earnings cuts, and that needs to be avoided. So I would have a strong cyclical tilt to the portfolio.
IT, where does IT come in your portfolio right now, Anish?
So IT, I don't see an upside story developing. And, people are focusing on the AI risk, but even apart from that, right, I think the US economy is actually still very strong. And from here, at least cyclically, I would expect the US economy to weaken. So while the stocks have corrected a lot, I don't see how earnings growth can accelerate there meaningfully. So I don't see much upside risk, upside potential in IT, and therefore I would kind of stay on the sidelines there.
Are we underestimating the extent of earnings downside for the market, say in Q1? Perhaps it filters on to Q2, spills over into Q2 as well, because the war has gone on longer and crude now is back again at $120 per barrel?
So that's possible. I mean, one can't rule that out. But I would say if it's a temporary problem, right, we should look through it. Only to the extent, but not get into companies that with this earnings downside end up with a weak balance sheet, right? See, you lose money when a company comes and raises capital in a downturn, right? If you have a 2-quarter downturn and the company's balance sheet is healthy, you come out of it pretty okay, right? You see that as an opportunity to buy. So it's important to avoid companies with weak balance sheets. But other than that, a 1 or 2 quarter, volatility is par for the course.
Right. Anish, we'll leave it there. Thank you very much for joining us. Good speaking with you, and look forward to our next conversation. Well, thank you. Well, I think the market, of course, is down about 300 odd points. Market breadth is, it's cautious, right? I mean, you got what also complicates the situation is a 3-day weekend. So longer term, slightly positional calls, but will not change. But shorter term trades, etc. You want to be cautious and not get caught out one way or the other. That's always a issue ahead of a weekend, but this is like a 3-day one in that sense. Waaree is down 9%, and we've got the management coming up with us in just a bit from now. There's HDFC Bank, which is down 2%. I'm just looking at the big volume-led losses. Garden Reach is down 3.6%. But, Garden Reach, Chola, Mazgaon, they all went up yesterday. So there's some reversal this morning coming through. Adani Energy Solutions, right? A fantastic April. It's up 45% still after today's 4% cut. And the other one is Indigo, which is slowly but surely come off the highs. It had recovered very, very sharply from in April to about almost 5,000 levels. It's now closer to 4,000 than it is to 5,000 as oil, of course, continues to look very strong. Well, let's just talk about, of course, the exit poll numbers, which we got yesterday. And we have...
Lata now joining in because Rupee has hit that level of 95.1, its lowest level in April, thanks to pressure from surging oil prices. In fact, all Asian emerging market currencies are also plumbing new lows today. Lata's here with more.
Well, it is a shock that it's going above $120, and you should not be surprised with what the rupee is doing. At the moment, surging at 95.20. The lowest it hit on March 30th, before those extraordinary steps were announced, was 95.22. And then, we saw the dollar going to 92.90 as well. All those gains have been erased now. And therefore, the market will watch with interest whether there are any more cards up the sleeve of the Reserve Bank. But importantly, we are obviously not falling alone. Everybody east of the Strait of Hormuz is impacted. In fact, today, look at some very bad impact. The South African rand is down 1.4%. We are down only, 0.3%. Giving us company are the Korean won and the Taiwan dollar. Both of them are down as much or a little more than we are. 0.4% lower. I think the rupee is also now 0.4% lower, the 0.33 as we speak. But the point is, this is a synchronous fall. And now the market is watching if the Reserve Bank has any more steps. Incidentally, the entire dealing rooms of all banks are in Amsterdam because there is a FIMDA meet over there. We have very thin views coming from dealing rooms in India itself. But don't miss the yield market. The 10-year yield has gone above the 7% mark to 7.05. Clearly, that's where trouble is going to come because will the government have to borrow more? You can do one of two things. Either you can take the hit on your own fisc, in which case you will borrow more, or you'll have to pass it on to the market, in which case you will push up inflation, which also will push up interest rates. So there's no running away from this. This is a zero-sum game. And if the fisc were to, support oil prices, the consumer a little more, it will mean it will have less for capex. So that again is a growth hit, which is what you're seeing in the equity markets, all those stocks going down. Now, will the government have the courage to come with something like oil bonds, which they criticized so roundly in the last 10 years? That will have to be done, make the oil company bear the losses. Tell them you take the loan against the bonds we are giving you. We will give you 10-year IOUs, 5-year IOUs. After all, crude is not going to stay at 125 forever. We know that with renewables picking up, sooner or later, crude will take a U-turn. Bonds would be a good idea. All I'm saying is that all markets are impacted because this is a huge macro disturbance.
Absolutely. And actually, that's a strange situation also because, oil can drop $10, $15, $20 at the whim, right, of one man. So it's that kind of a situation. So the renewable story is longer term, but even here, it can just go the other way very, very
as
sharply.
As you said at the beginning of the morning, when you were introducing the commentary, you said that there is a kind of a stalemate when you say that I'm ready to blockade as long as they don't meet my commitments. That goes down very bad for a country like India or Korea or Taiwan, where your hit all ends up.
Yeah, no, absolutely. But we'll see what happens. And this is a strange situation, not permanent situation, obviously, with oil here. Maybe it goes up if this escalates, but it could also drop very sharply if it de-escalates. So for a policymaker, it is a situation, you're reacting to something which is not going to last for very long, but you got to react. So what's the best possible way to do it is the question. Anish was making some similar points earlier when he was with us. Sandeep Shastri is with us, Pro-Vice Chancellor, Jain University, and Pratim Bose is Senior Journalist on, of course, the exit poll results which came through. So I think all of them, the polls generally showing, lead for the BJP in Bengal. Close fight, but perhaps a lead. DMK in Tamil Nadu, the UDF in Kerala, and the BJP, of course, back in Assam as well. Mr. Shastri, your first thoughts? There are, of course, some outlier polls. Axis My India, for example, in Tamil Nadu. They're yet to release their numbers for Bengal, which I guess we'll get today. But first thoughts?
In this world of ifs and buts, which we are going to be for the next 4 days, till May 4th when the result comes out, if we go by what the exit polls are indicating, I think there are two very clear indicators. One, in Kerala, the UDF coming back to power, this is something coming to power, which is something all the exit polls seem to be saying. And the second is that in Assam, the BJP is likely to retain power. This again, there seems to be a consensus across the various exit polls. On Tamil Nadu, a lot of the exit polls are saying that the DMK is ahead. There is one poll which puts a assembly with no clear majority and Vijay also being a key player as per that poll. But one thing in Tamil Nadu is clear, the
Vijay factor has impacted on this election. There is no doubt that Vijay will emerge as a third force in this election. It is no longer likely to be a bipolar alliance contest, but a three-cornered contest in Tamil Nadu. I think the mother of all battles is West Bengal, where there has been a divided opinion. Some exit polls have argued that the BJP is ahead. Some have even argued that the TMC is ahead. And all of them speak of very, very small margins. So I think this is, for me, the toughest contest that is happening, toughest contest that West Bengal has faced till now, and toughest contest among the various states we have had for quite some time. So everybody's eyes, I think, will be on West Bengal and Tamil Nadu, where there is an element of uncertainty. There is a likelihood that the result may not necessarily go as to how the exit polls are predicting. So these two polls will be very, very closely watched. And I think the debate and discussion in the media, social media, print media, electronic media, has all been on these two states, Tamil Nadu and West Bengal.
Yeah, no, absolutely. And Bengal more than Tamil Nadu, I reckon. Mr. Bose, your anything sort of out of the ordinary, out of the poll that you are, which caught your attention, and what would you be watching out for?
So practically, if you see Kerala, Tamil Nadu and Assam, the trends are more or less on the expected lines.
Right.
You are not expecting any surprises there overall. The only thing is about Kerala is who will be the chief minister. Congress, I think that is what is being debated at this moment. Assam will be expected to be a BJP way. Tamil Nadu DMK government, there is no reason why the DMK government can be toppled because there is no, the opposition is too weak. That said, only West Bengal is the surprise element in the whole package. And for many reasons, this election will be quite path-breaking in West Bengal. And it will have tremendous impact on geopolitics of that region and obviously on India's security architecture.
No, point taken. You know, the Access My India poll on with regards to Tamil Nadu, Mr. Bose, right? I mean, that is, of course, it came as a bit of a shocker. So, you know, what odds would you give it? That turning out to be correct? I mean, everybody is predicting DMK comes back, and then you've got Access My India, which is swinging to the new entrant.
DK, right. So, not very convincing. I was in a debate yesterday and not very convincing. See, in an election, surprises can happen, surprises should happen. Otherwise, why should there be people's choice? But overall, I don't know. I'm sitting far away from Tamil Nadu, but it's not very convincing.
It is not. Got that. And same question to you, because that was so far what we've got, that was the only outlier. Mr. Shastri?
Yes, I think the projection by Access My India for Tamil Nadu, I think, is an outlier. I would take it with a pinch of salt. I don't think the margins would be so high for the Vijay party. I would see it much lower even. I think the best performance it could possibly have, maybe 20 seats, maybe 25 seats. But the challenge is that the Vijay party is a party which has been an electorally untested party. This is the first election that they are contesting. And to expect them in a very clear bipolar contest to be able to take 35% of the vote, which the Access My India poll is saying, seems to be a little of a challenge, seems to be a little of an overreach, is what I would say. Because when there has been for more than, more than 60 years, near bipolar alliance contest in Tamil Nadu, when a third player emerges, that third player does take some time to be able to make a break-in. And there is no real visible anti-incumbency sign against the current DMK government. The only factor which people are saying is a lot of people in Tamil Nadu are looking for change. A lot of people of Tamil Nadu have lost patience with the traditional politicians, and Vijay seems to have come at the right time, especially in a post-Corona, the post-Jayalalitha era. So that's the only factor which we need to watch out for. But I would still argue that the Vijay factor is there. The Vijay factor may lead to the emergence of a third force. As I've said in other channels yesterday, this is likely to be a transition election, and the next election will really see the reconfiguration of forces within Tamil Nadu.
All right. We'll leave it there, gentlemen. Thank you very much, both of you, for joining us. And we'll wait for the actual results on Monday as they come through, filter through. There's some recovery, about 50 points on the Nifty, which has come through 23,900. And I just want to make a quick mention of 2 or 3 names. One is Chempro. Chempro is up 13%, and I think this is the Adani Group company, which is into construction. The name was changed, and it's up big time. But the Adani Group company, 760 ITD cementation. Yeah, but that's the one. So it's a big move. CEMPRO, if you can pull that name up. So that's one.
Chem India Projects.
Chem India Projects. And MTAR Tech, we were talking about this in the morning. It's up 7.5%. So it's a massive move coming through. And it's up 150% this year. And we're only wrapping up April. So that is, Chem India Projects. So 770, 13%. MTAR is up 7.5%. And then RPG Life is coming up with very massive volumes. Stocks up 12%, 2,272. There's other stuff as well, but it's all with smaller gains, price gains. These are the 3 names which are closer to 10 and more than 10% at this point in time. Bajaj Finance is, I think, at the high point, almost the high point of the day, about 4% higher, 964 on Bajaj Finance. We'll take a break. We'll talk to Waaree Energies management on the other side. Stocks down, numbers came through, outlook in focus coming up.
Welcome back. Markets still under pressure. The problem is Brent crude prices have spiked up and the rupee continues to weaken, currently making fresh lows, 95.2 odd. But another stock that's under pressure is Waaree Energies. They reported actually a muted set of numbers. The revenue was in line while the margins were a little lower than expectations. To help us out with what went on in the past quarter and what's the way ahead, we're joined by Mr. Hitesh Doshi, the Chairman and Managing Director at Waaree Energies. Hi, Mr. Doshi. Good morning. Good to have you on the show. Well, it seems the markets wanted something more from you, because the stock is under big pressure. I think the stock is down close to 9%. But that's the nature of the markets. Let's understand business. There was some contraction in module realizations. If I look at it, it appears it's down by close to 1% on a sequential basis. Is this in line with your expectations? Do you expect further pressure in terms of realizations? Point number 1. And also margins did pull back. Is this the new normal? What is the range you're working with?
Good morning, and thank you very much for inviting. I think to answer your first question, this year was definitely better than our expectation. As you know that we had given a guidelines of 5,000 to 500, and we have done over 5,900 as a EBITDA. The margins, of course, our guidance was around 20%, and we are above that. Particularly, the last quarter was definitely, there was a pressure on the commodity prices, and it is continuing yet. But overall, as a company, whichever the directions we are investing and the new projects are coming into the commercial productions, I think it is all as we are expecting, it's going on. There's nothing, we don't see anything change here.
But what about realization, sir? Will they be under pressure from year on? And also, as you're telling us, last year you guided for an EBITDA number, and it appears for the year you've done a little bit better. So this time in your guidance on the EBITDA number, are you being a little bit conservative? Is there an upside risk to that EBITDA number?
No, I think we are giving the guidance of 7,000 to 7,700. So still a lot of projects to come online in this financial year, like batteries, ingot wafers, solar cells. So definitely the numbers will be much better in the next financial year. But this financial year also, the numbers which we are giving, they are as per the plans. We don't see any change there.
Mr. Doshi, good morning, sir. Prashant here. What about margins in FY27? There is a significant upward movement in metal prices, right? Commodity inflation is already there. And I mean, generally, it's all forecasts and it may be wrong, but forecast is that we will see overall higher levels, inflated levels across the commodity universe. So what kind of margins can you do?
No, as I agree, this was definitely a dent in the last quarter. But after going more than 90 days, close to these, or precisely 60 plus days in this cycle, now we have adjusted our prices, and customers are also now agreeing to the present issues of not only the commodity, but the cost of shipping and other costs which have increased. So with that, now the selling prices are a little bit different than what it was. With that, whatever the estimation we have done, that's the number which I have shared now.
So in that sense, could you give us on the margin front? Could you give us what should we expect EBITDA margins?
EBITDA will continue what we said last year, also around 20%, and that we believe that in such scenario also we'll be able to maintain that.
Okay, just this solar duties on solar cells in the US. The 126% CVD. You said it does not impact you. Could you? Does the recent anti-dumping duty of 123% impact you? I mean, just give us your perspective on this.
Right. Let me answer both your earlier question this together. Where the Waaree is moving first, we are moving from pure play solar modules to the vertical and horizontal various businesses in energy transitions. So as long as Waaree is concerned, it is not going to be only a module player in the near future. Now, that will definitely help to achieve all the EBITDA numbers, whatever the solar modules and all that comes. And most importantly, the backward integration we are doing up to the ingot wafers and our recent investment in a polysilicon, this helps the Waaree to cover the entire range. Coming back to the United States, what we have done, we have started with the 1.5 megawatt. In next 6 months, we'll be there a 4.5 gigawatt plus. So 1.5 gigawatt to 4.5 gigawatt, this gives the clarity that we are increasing our market shares in the United States. So there is no issue as long as the company is concerned about the duties and all that. Now, where these duties are there, these duties are based on where the P junction of the solar module is made. That is a solar cells. So we do not use any made in India cells. In last 10 years, we have not used it. We don't intend to use in near future. So as long as, even if the solar panel is made in India, the sale is coming from the country, there is no impact either of the anti-dumping duty or any other duties on the solar panels made by us. But definitely we are shipping more and more modules now from our American factories, and we intend to increase our capacities in US.
Got it. Thanks very much, Mr. Doshi. We had more questions, but we're completely out of time. Lots of earnings coming through. Look forward to more chats in the future as well. Good luck. That is Mr. Doshi with some perspective. By the way, look at oil, 125. So, we moved up $4 from the time that we started at 8 o'clock in the morning. So that is a very, very sharp, rapid move coming through. Federal Bank is the next one. Reported fourth quarter numbers. And we have the management with us, Mr. Venkateswaran, Executive Director of the bank. So good morning. Good to have you with us here. Thanks for joining us. The numbers we'll just parse through in a bit. But should we expect some of the impact of what we have seen especially on the SME, MSME side, even on perhaps retail personal loan side, to show up in the next 2 quarters, this quarter and the next quarter, as some other financial managements have told us?
Good morning, Prashant. Thank you for having me on the show. Just to answer your question, just before that, you would have seen we have had a operationally very strong quarter, a record quarter in terms of NII, fee income, operating profit and net profit, even excluding the one-offs. So a very strong quarter. Now, to your question on the impact on the next couple of quarters, see, the impact of the Middle Eastern crisis, we haven't seen much as yet. And we believe that if it continues for a while more, then probably from Q2, some impact will come through. But right now, we haven't seen any stress coming through in our MSME or the business banking book.
So which is the way, gold loans, for example, have grown very, very well. What's the portfolio mix now, and where will that stand? Gold loans as a share of total. What are you comfortable with?
See, gold loan currently, like you rightly said, we have grown 9% QOQ. And this is despite the fact that we had to degrow one part of the book, the DigiBiz, which we had to wind down. Currently, gold loan constitutes 14% of the advances. And we are quite comfortable to grow that. There is no... At this stage, we are not looking at putting a cap on the growth. And more importantly, the LTV which we have is less than 54%. So there is enough headroom and there are enough checks and balances to monitor the volatility as well and take corrective measures. So at this stage, we are not looking to pull back the growth in gold loan book. We still have room. Maybe if we get closer to 20% of the overall advances, at that time, we'll assess and decide what should be the threshold.
And 9% quarter-on-quarter growth in assets. How many new customers, sir? What is the growth in customers quarter-on-quarter? If you can give us. Because one criticism which is made is it's the same customers, the pool is not growing, they're borrowing more, perhaps because there is stress on personal balance sheets, household balance sheets, etc. So just that number?
Is that on the gold loan or on the...
Gold loans. Specifically gold loans.
It's more than double. It's about double digit in terms of customer growth as well, Prashant.
Okay, 10% plus, 9% in assets and loans, and 10% plus in customer growth.
Yes.
Got it.
So on your margins, 3.74%, I think it also has the benefit of that income tax refund. So what is the normalized margins, NIMs, and what is the expectation for FY27?
Sure. The normalized, excluding the impact of the interest on income tax refund, the NIM came in at 3.20%. which is higher than Q3 by 2 bips. This is despite the fact that 2 months impact of the December rate cut came in this quarter. So we grew the NIM by 2 bips in the quarter. In terms of outlook for FY27, at this stage, I would say we are looking to grow the NIMs by about 5 to 6 bips per quarter. May not be linear. But having said all that, we need to be mindful of the external environment as well. Things are pretty volatile. And of course, we'll be agile and astute to opportunities. And wherever we see opportunities, we'll press the pedal.
Okay. So assuming 5 basis points NIM expansion quarter after quarter, approximately, when we speak same time next year, there should be an expansion of 20-25 basis points in your NIM. So can you grow your advances, say 15 to 20% with this NIM improvement expected? What is the guidance on advances?
The advances growth, like Q4 was 4%, and we are looking to grow it at mid-teens, which falls between 15 to 17% is current outlook. But like I said earlier, we'll be mindful of opportunities, and if we need to, and there are some spaces where we can grow faster, which we will. But at the same time, there is need for being prudent and cautious of what will hit us in the medium term. We can very quickly grow the book now, but 1 year, 2 year down the line, you'll be facing the consequences if you're reckless, and which we'll never do. We have never done that.
That's a high-yielding loan book, as well as improvement in the CASA ratio as well will be tailwinds for your NIMs. So we got that out of the way. Let's focus on the ECL impact then. Earlier, you didn't expect much of an impact. But in Q4, there's an impact of around 400 crores, contingent provisions largely towards ECL. Are you fully covered now basis the current book?
Nigel, let me clarify the provision which we have made in Q4 is on a prudent basis. That's the income tax refund interest element. We chose not to take any of it into the P&L, provide for that, given the fact there is ECL transition coming up. And this is not against any specific assets. There is no stress in any particular book or anything. This is just a floating NPA provision.
Okay.
And this will help us in the ECL transition.
Okay, so there's no more that you'll have to do, right, from here on?
No, I'm not saying no more. We are assessing what is the impact of the ECL. It's just come 3 days back. We will assess and then we'll come back with what will be the impact. But this will help us in bridging that gap.
Okay, so we'll wait for further clarity on that front. Let's focus on a couple of other aspects then. What kind of fee to assets are you targeting for the coming fiscal? That's FY 27 and 28?
Yeah, the core fee income, as you saw, has grown quite strongly in Q4 as well, though Q4 traditionally is good. But if you look at YOY as well, our fee income has grown 24%. And fee income as a percentage of assets is 1.07. Our aspiration, as we set out a couple of years back, was to get to around 1.5, 1.6 over a 2-year time frame. So I would expect another, 15 to 20 bips improvement over the year.
Okay. All right. So talking about value unlocking, some part of the street is maybe expecting you to separate the wealth business into some subsidiary. The reason is that for the wealth business, you'll get a PE rating. When you keep it within the bank, it's on price to book. Is there any kind of value unlocking, separating the wealth business into a subsidiary? Could that be on the cards?
Nigel, we have just launched our wealth offering in March.
Yes.
We're just about beginning the journey, and there's huge potential of that business to grow AUM and fee income. At this stage, there is no thought or discussion about spinning it off into a separate company.
Once it grows, maybe then at that point of time, you could look at it. But I just wanted to know directionally how that business is likely to shape up.
We see huge potential given the fact that we have a very strong liability franchise and the NR franchise also. We crossed 1 lakh crore in NR deposits for the first time in this quarter. And the NR customers by themselves would be a significant pool to tap into for growing this business. So we do see great potential in the wealth business.
All right.
And we are targeting the mass affluent. Yeah.
Okay. So on the remittance side, because of what's happening in the Middle East and Federal, of course, is, I'm assuming, the dominant player in terms of handling remittances, flows, deposits, etc. Is there an impact you've seen at all?
In fact, we saw a positive impact in March, Prashant, and it was higher than normal. One could say it's this. It could also, Ramadan was in March. So it could be a combination of several factors. But as things stand, we haven't seen any deterioration, and the flow continues to be strong. And we have got our remittance market share back above 19%. And it's always with 1 quarter lag, which RBI publishes. It's about close to 20% now. Yeah.
Okay. So no problems in that sense. March perhaps even better, as you put it. We'll wish you all the best of luck. Thank you very much for joining us, Mr. Venkateswaran. Appreciate your time here on CNBC-TV18. Okay, well, we'll stick with financials and markets taking note of it. Is down again. I mean, there was a 50-point recovery. We are down to the day's low once again. 315 points down, 23,865. Bajaj Finance in focus. I think it's come off the highs, of course, with the market doing what it is. But let's just revisit the numbers in the commentary. Ananya is here. Ananya, take it away.
Bajaj Finance delivered a strong Q4 in line with expectations. Asset quality remains a key highlight this quarter. Margins were broadly stable. Return ratios were impressive. GNPA at 1% and NNPA at 0.4%. Now, the management commentary was impressive. They said that MSME stress is easing. Gold loans will be the key driver going forward in FY27. Now, they also highlighted AI transformation across underwriting collections will help improve productivity and profitability over time. Now let us look at the brokerage view. Now, brokerages remain positive overall. Citi upgrades the stock to a buy rating with a target price of 1,120. HSBC has a buy rating with target price of 1,100, and Jefferies has a buy rating with target price of around 1,200 against the current price of around 930. Now, only Macquarie remains cautious with an underperforming rating and target price of around 860. So overall, the management and the major brokerages remain positive on Bajaj Finance.
Okay, thanks a lot for that. By the way, Vedanta has listed, and it's listed at a bit of a discount in comparison to what Street was estimating, because the Street is clear. They have bought this entity because bulk of the value will come in from the Vedanta aluminium part of the business. So listed at around 290 rupees, and there is some supply that's coming in there because the Street wants to hold on to the business, which is aluminium focused, which will get listed in the next 4 to around 8 weeks or thereabouts. So for the time being, those that play the special situation primarily for aluminium, they're taking some money off the table. If they bought at 700, 750 rupees, they're taking 280, 290 rupees odd. And they're hoping to make up the remaining of the money primarily from the aluminium business, and then oil and gas, steel, as well as the power business. So that's why you're seeing some kind of selling pressure. Vikas, who joined us earlier today, he had an estimate of close to 350 rupees for this particular business, which primarily gets bulk of its value from the 61% holding that it has in Hindustan Zinc. That's about Vedanta. Let's tell you about HEG. Stock is down. It had a big run. A lot of hopes that, there's a big revival in the steel market, so HEG will gain. But the numbers didn't look good. Though there was a growth on the top line on a year-on-year basis, on a sequential basis, there was a degrowth. So clearly some impact of the Middle East war is being felt, because they would be exporting to the Middle East as well. So that's why you saw a sequential decline. Margins, if you look at the profitability, there was a loss. But you need to note that they have a stake in Graftech, and they account for that in the other expenditure on an MTM basis. So even stripped off that, still the margins that you get is closer on 7.5%, which is sharply lower than the 20% odd. So we'll have to find out the reasoning why there was such a big decline in terms of margins. The employee cost as well was up, big spike in other expenditure as well. It appears needle coke prices could have moved up, and they haven't increased the graphite electrode prices. Numbers are disappointing. At around 12 noon, we'll get most of those answers to all the questions that we're putting forth. For the time being, the stock getting slammed. But Sonal joins us to tell us about Navin Fluorine. Sonal?
The stock has come off from the opening highs. It was up 4% at a point in time off those levels, but the numbers were very strong. It was a top-down beat. Revenue growth of around 34%. The EBITDA grew 80% on a YY basis to come in at 321 crore rupees. Margins at 34.2% versus 25%. Profits also up 124%. Across the board, it was strong showing from all the segments. Be it the specialty chemical segment, where the revenues were up 13%. HPP revenues were up 21%. CDMO did really well, 62% growth in their revenues this time around. And on the back of this, a lot of brokerage upgrades which are coming in. Target prices have been increased across the board. Jefferies, for instance, has increased their PAT estimates by 5 and 11% for the next 2 fiscal. They have raised the target price to 8,385 versus 1,700 earlier. Nuvama has done the same, increased EPS estimates by 9.5 and 4.9%. And the target price has been increased as well to 8,031. But yes, the stock has come off from the highs despite strong brokerage action, commentary and results as well.
Thank you very much for that. Get into a break. On the other side, Manisha will join in to talk about crude prices and commodities. Brent crude has now crossed $126 per barrel.
Welcome back. I think we've got markets which are down 330 on the back of course, the $4 spike in oil prices we've seen just in the last 2 hours, 2.5 hours. Manisha is here, and I'm sure oil's top of our mind as well. Manisha, morning.
Only thing on my mind, Prashant. Well, yes, a very, very sharp surge is what we have seen in case of the crude oil prices. Should get it on your screens, really. And there you have it. The Brent is up 6.5% right now, and nearly 3% of gains is what we are looking for WTI as well. At $125, $126 a barrel, this is exactly what the markets had been talking about. That if the Strait of Hormuz continues to be shut, this is exactly where you will see the crude oil prices by the end of April. The markets have been believing that the street has been mispricing when it comes to the crude oil prices. You know, the conversation is that even if there is fight that continues between US and Iran for a longer term is okay. But if the Strait of Hormuz opens, you could see the crude oil prices come down. It really is about Strait of Hormuz at this point in time. That being shut and versus 140 ships that have been crossing Strait of Hormuz, only 4 to 5 have been crossing at this point in time. That is nearly 20% of a decline that the global markets are looking at in sense of oil availability. This is what we've done in sense of prices, 15% up for the week. And with that, it's nearly 100% up for this year that we are looking at in sense of crude oil prices. The ongoing Middle East crisis and the fact that the Strait of Hormuz is basically shut has been keeping the prices on the higher side. The US also says that they will maintain the naval blockade on Iran until a nuclear agreement is worked with Iran therein. The US inventory also has declined quite sharply, whether it has been about gasoline, distillates, the inventories have continued to decline. The other thing that the markets will watch is for the US exports. For the month of April have been hitting record highs at almost 6 million barrels per day. And that clearly is quite bullish for the markets therein. The UAE walking out, this did give us a knee-jerk reaction yesterday when we saw the prices correct slightly lower. But remember, the UAE cannot increase production or export in the near term till the war is on. So that doesn't really add too much onto the global supplies right now. Other thing to see is the Asian consumer prices that Saudi Aramco would be putting in. It has been at a $19.5 of a premium, which has been a record number. But for the month of May or June, you could be looking at those premiums coming off. And that announcement would come in on 5th of May, another thing that the street will keep an eye on. But I want to take you through on what the crude prices have done in this year. So 1st of January, crude prices were at $60 a barrel. Just before the war began on 28th of Feb, crude prices were trading at $71 a barrel. We saw it go to 85 as a yearly high by the month of March. By end of March, we had done 118, but back at around 110. We are trading above 120 at $125 a barrel. So from where we started on 1st of January, it's more than 100% of gains that we are looking at in sense of crude oil prices there. Even more interesting to see is what the banks and brokerages globally are thinking on where the crude prices can go from here on. $80 of an average is what Bank of America is working with, but we've seen 125 today. So let's see whether they revise it or not. JP Morgan has talked about $120 of a possibility in this quarter itself. We've seen that come in already. Citi says a worst-case scenario can take the prices to $150 a barrel, and that's exactly a statement coming in from Barclays as well. So the banks and brokerages are talking about much, much higher upsides, and $150 a barrel would mean a new record high for crude prices. The previous all-time high is 147, so 150 is a possibility there. 90 of an average is what Macquarie is working with, 85.5 from Standard Chartered, 85 and $80 of an average crude prices is what Barclays and HSBC also are looking at. So your average pricing itself has increased quite on the higher side, with the possibility that this can go much higher, because 125 is where we are trading right now, 60 is where we started with, and 150 is what the banks and brokerages are pricing in as a worst case scenario in this quarter itself.
All right, Manisha, thank you very much for that. Well, it's just dizzying, right, what we are seeing with oil. How long will it stay here, and what happens is the question. Complicated for us from an equity perspective because you've got 3 days of holidays coming up. We'll take a break. We're back. The management of Indian Bank will be with us on the quarterly performance in just a bit. Stay tuned.